Perfect. Let's move on and let's take this question from Kolkata, Mr. Hector. It's on Oberoi Realty and the entry price is 1860. And he wants to add for long term, almost 2 years. Gaurang, not sure about the stock in concern in your radar, but obviously let's start with the sector then.
Well, Kavita, we do have a positive coverage on a couple of real estate companies, Kavita, to be very honest. So just to name a few, Oberoi Realty, as a disclosure, appears in our fundamental coverage. DLF, Godrej Properties, Prestige Estates and Sobha Limited. So these are some 4 or 5 odd names in the real estate pack. And all these names that I've mentioned, Kavita, if you look at the industry and these companies, the debt is relatively low or virtually negligible. Most important thing, the run rate in terms of execution of project. So first of all, hold on to your investment in Oberoi Realty. You want to average. My principle or my advice to people who want to average is, Kavita, that unless and until you get a downtick of almost about maybe 5% or more from your earlier acquisition price, you should not average, because that does not come to a conclusion in terms of meaningful average and sizably bringing down your cost of acquisition. And if you do get that 5% or more correction from your earlier acquisition price, for example, if you have 100 shares, don't average another 100. Average maybe 25 or 50 shares. And then when you get an additional dip of another 5% or more, then you go and add another 25 or 50 shares, depending upon what capital you have to invest from a long-term point of view. So by doing this, Kavita, this phased out manner and 5% gradual averaging will bring down the cost of acquisition to a great level, and then the possibility of a profit or a decent profit definitely emerges on the horizon. But hold an average in this way, then you will make a decent lower level in terms of the cost of acquisition.
Got it. So those are the guidelines for averaging out on your current holdings. Thank you so much for that.